Good afternoon, ladies and gentlemen, and welcome one and all to this afternoon's session, the Pre-NFP preparation session. Hope you're doing well. Got lots and lots of data to get stuck into this afternoon. It's going to be a bit of a hefty session. Managed to pull some pretty interesting figures out of my various sources of information, so that's pretty good. So we'll get stuck in. Been a mad day today. Been a crazy busy day. But yeah, we've got some interesting data to go through. As I said, some really interesting numbers coming out from, I would say, some pretty interesting sources. And I think I'm going to make this the normal, the sort of the new norm now for every NFP session. On the actual NFP, obviously today is my last day in the office for the next few days, but I'm going to make this the new norm for every NFP running forwards. So what are we ultimately looking at? I mean, the print at the moment for the market's expectations is at 50,000, I want to say. Let's just double check that. NFP 50K forecast for the NFP results tomorrow. Now, the previous real print was 22K. In terms of the rest of it, just bear with for a moment. I need to scroll down here. Hang on. Yeah. Right. So on top of that, we had average hourly earnings last week at 0.3%. which remained stable. We had the yearly average earnings at 3.7, which again remained stable. Average weekly hours remained stable. We had private non-farms. Where are our private non-farms? Non-farm payrolls private. See, we had a big uptick there, so we actually beat the 38 to 60 as well. Sorry. We had a 38 kit print in private non-farms, which beat the standard non-farms at 22K. And I'll come on to that in a moment, because when there's a skew in the figures there, you can see a readjusted prior month's figure, which can sometimes lead to a miss in future data. So analysts' expectations this time 50K. We may see something else, but I'll get onto that soon enough. We had participation rate 62.3 as well, and that remained stable at 62.3, with the unemployment rate remaining stable as well. So a lot of stability, and I was talking about it before the NFP that I expected the stability in the NFP, and I did, relatively speaking, I did this time around as well. Now, in terms of where the institutional and commercial biases are, I have actually managed to get the whisper numbers from the major commercial institutions. So I have, for example, Goldman Sachs actual forecast of what they're giving their traders to utilize for this NFP, which is pretty neat stuff. If you like your economics, of course, I'm not going to bore you with it if you don't too much, but you can kind of pass over that one. But generally speaking, so in terms of like the general expectation, the consensus is 77. So 77K jobs. That's not Goldman's numbers, but that's the general consensus from CME Group. They're looking at about 77 jobs added, up from the 50K sort of basic analyst expectations. The consensus range is between 59 to 110,000 jobs. In terms of the rest of the data, relatively similar to last time, so not much of a change in terms of average hourly earnings and unemployment rate. Those are looking quite stable. Now, in terms of what Goldman is expecting, Goldman Sachs is expecting 60,000 jobs to be added as a baseline in a sort of relatively and I quote unquote here, this is their own words in the text I've got, is a baseline benign range. And so they're expecting that to be within the sort of remit of where everyone is. It's not really too far out at the moment. They are looking at stability in the jobs numbers as well, but a fair uptick from the 22k previous figure that we did see, and also a 16,000 job uptick than the baseline analyst expectations that we see on our sort of economic calendars and so on and so forth. They point to a consensus range of around 50 to 75,000 jobs added this time around as well, which is what they classify as a tolerable window. They caution that an unemployment print at or above 4.4% would be seen as a strong downside shock, which could push markets to reprice recession fears and outpatient cuts. So pretty dovish stuff there if that one does come into play as expected. So that would be a 0.1% up increase in unemployment. And even though to us it might not seem like a great deal, that really could shape the entire event for you guys tomorrow. And then finally, I've got that conversely a print substantially above the consensus. So for example, if we see maybe, I don't know, 100,000 jobs added, or, you know, significantly stronger wage growth, that could put pressure on growth and inflation expectations, which would then jolt yields. And in doing so would also rally equities. So you might see equities pump. You'll probably, you could see the indices have a bit of a significant spike as a result of that as well. Now, ultimately, guys, how do you want to use these? I mean, look, at the end of the day, Goldman would, I would say, substantiate most of the institutional bias in the NFP tomorrow. So that 60k baseline, I would take that as what most funds are looking at, what most major institutional banks are sort of saying at the moment. The 50 to 75 consensus or sort of corridor, the range there, if you like, that should be taken, I would say, pretty substantially as well, as you know, pretty serious numbers there. If we do get 100k, as I said, that would be a really explosive NFP, and you guys would be in for a serious party as a result of that. If the number is a miss and we see a drop below 50k, you would be in what would be called a defensive shock zone, and that would probably spiral the DXY. Indices could have, no joke, maybe a 250 to a 300 pip move, especially the US 30 Dow Jones as a baseline. You could see a huge move out of the back of that one, but that has to come into play with the 4.4% unemployment threshold. That is paramount to see that kind of move. So when those numbers are coming out tomorrow, be sure to look at the unemployment. If there's an uptick in unemployment with a miss in the jobs numbers, recipe for a bit of disaster. It depends what indice you're trading, because some of the indices, I would say maybe the S&P 500, for example, that might have a dip as a result, but you would see tech stocks maybe pump at the same time. So you'd have to choose your indices wisely. I would probably, at the end of the day, be of the frame of mind that if there's a miss in the data and an uptick in unemployment, buy the NAS 100, sell the S&P, or even better, actually, guys, even better, scrap that last one, buy the NAS 100 and sell the US 30 Dow Jones. That would be the way forwards for that, I would say. And then you could arguably double up on your money and get some significant risk reward as a direct result of that. Right, so for Braden Coratim, I just got to the end of a mega deep dive on data. So don't worry, it's all going to be saved. The session is, it's being recorded as they always are. So you can get that on catch up, the first part of the session, because frankly it was a serious deep dive on data, and I can't remember my my flow. I'm out of the flow. But don't worry, there's more to come. So that's ultimately where we are with the commercial view. So in terms of the caveats and considerations, then I've got some caveats and considerations here. The recent actual print of 22,000 jobs was far below the consensus of 77,000. That's on the last NFP, which shows the scale of difference in data that these analysts' expectations can provide to the market sentiment before the event, and then obviously with the real print after the event takes place. The revisions to prior months are a major swing factor. So if a prior month gets revised, for example, downward, that is going to significantly amplify the market reaction when the data comes out, and it's for example, a beat on the data. Now, in terms of the private payroll data, I did touch upon this a little while ago. This is the non-farms versus private only. It can diverge and skew forward expectations. So in August, the private jobs gains were only 37,000 lower than the consensus, whereas the 22K under a 77 was quite a bit more significant. Now, given weak recent prints in downside surprises, the risk of a miss is elevated this time around. Okay, so there's more of a trend to see the data actually miss the 22K expectation than to beat it, even though we've already been able to ascertain that the commercial view in this NFP is suggesting 60,000 or 66, whatever. I think it was 60K from Goldman. So there is that. Now, many market participants may already price in the downside skew. So an unexpectedly positive print this time around is going to cause a heavier upside move, whilst a weak print might already be partially discounted and priced into the market. So you do want to consider that as well. Now, as I mentioned, and this is really more for Braden Cortin, as I mentioned, and obviously for everyone else out there, the unemployment rate with a miss on the data together combined is going to be what drives a very dovish NFP event this time around. Whereas if we get jobs numbers above 100K and at the same time above 100K for the jobs numbers, and at the same time we see unemployment drop a tick, that's going to be fireworks. You're going to see things really, really take off as a result of that. So those are the two connected points that you need to see for bullish or bearish momentum. If you don't, you're probably going to remain in the band. Okay, that's the sort of baseline corridor, as they call it, which is where we see stability in the NFP tomorrow and practically nothing happens as a result. You get your 15-minute volatility strikes and you won't get much more volatility out of it other than that. Okay, so I know half of you aren't going to be clear, of course, because the sound wasn't coming through, but you guys catch up on that one. And please, if you have any more questions or anything that you want to know about it, please hit me up, fire me questions in the chat, and I'll get back to you ASAP. Now, with that data in mind, let's get going. Let's have a look at the indices for tomorrow. So what we'll do in this afternoon session, what shall we do in this afternoon session? What we're going to do is, I'm going to do the US indice open session. No, I'm not. What are we at? We're at 10 to 2. No, what I'm going to do is I'm going to put together some expectations for tomorrow, trading opportunities for tomorrow's NFP as best I can. That's what I'm going to do now, and then we'll end the session this afternoon with the US Open setups for you guys to trade today. So that's what we're going to do. Right, so we got to start with gold, right? Gold at the moment did have that really nice price action pullback, by the way. Came down to 38.55 and is now coming all the way back up yet again. We've just come a tiny touch away from that liquidity zone above. Now, in terms of the expectation for tomorrow, now, of course, if it's a non-impact event, I have no bias, right? I'm not just gonna randomly say, if it's a non-impact event, trade gold short back down to 38.70, for example. It's useless. So if it's a non-impact event in terms of the data itself not supporting a move, then we just don't trade. If we see, let's take the commercial bias 60k. Let's say that we beat that and do anywhere from 75, I think I said, to 100k jobs, plus a 4.3 or 4.2% unemployment rate. Maybe even with strong wage growth, throw it in the mix there. Gold is going to absolutely tank. And I would have no doubt whatsoever that by the close of play tomorrow, based on the data that I've just said, we could see 38 flat on gold by the close of play this week. Now, what I think we can certainly say about where gold's trading at the moment, we have a very nice trading margin between 38.50 and 38.20 to accommodate us for a potential short. Now, what we can do is actually thin up this zone here, drag that along to the right-hand side, and this could be a really nice breaker structure point for that trade. So you could potentially jump in for the short here, monitor the situation here. If it comes back, you've already got a few quid in the pocket, so you can make a decision on whether or not you want to keep that money at risk. Sorry, guys, just bear with me 2 moments. Just bear with. Go on then. They're digging up the bloody road down outside the house, like, you know, whoever they are, the local state, digging up the road, and they're using this huge roller thing. And don't worry, I'm not going to go on too much of a tangent about this, but it's scaring the crap out of my dogs. It's horrible. They're very, very upset about it, crying their eyes out. They don't know what the hell's going on, so having to deal with that at the moment. Shaking the whole foundations of the house. It ain't right, is it? But there we are. So, as I was saying, breaker structure here. Monitoring situation here at around 38.56. If we get the breakout down below here, fantastic. We take the position right the way down to 38.20. But this only works. Strong jobs numbers, a tick down in unemployment, and of course, potentially, just to add confluence into the facts, we potentially look at strong wage growth as well. Those 3 indicators. But I think you'd be all right just on the NFP above, 80, 90, 100k, and a downtick in unemployment. It's very bullish. That'd be incredibly bullish. Dollar would spike. You'd see the DXY rally. I think we're trading at 97.71 at the moment. You definitely see dollar index trading close of play tomorrow at 98.68 for sure. I would expect. This is a daily time frame, so yeah, it's quite the move. I think you'd certainly be looking at the dollar index back up at the previous highs for sure as a result of that, and then certainly see gold trading back down here, 38.20 at a minimum. So that would be the gold expectation for strong numbers. Now, if we get a miss in the data, so let's say, look, we've got a 50k analyst expectation, commercial views at the moment sitting around 60k, so a beat in the numbers. If we get another 25k print, as I said, this may happen because of the difference in the data that we had last time. We get that miss and we get a 4.4% unemployment rate at the same time, gold trades to 39.50. I am absolutely dead serious. We see those numbers, gold trades to 39.50. So ideally what we would like to see happen is gold remains in the range at the moment, so between sort of 38.90 and down here at 38.74. We would break structure upon the NFP release, and we would then be looking to trade up to that 39.50 point up there. Now, I will be removing this, guys. I was hoping this was going to get going a little bit sooner rather than later. So for those of you who are looking at that gold long, too much time's gone now. We don't want to be in gold still by tomorrow's NFP release, so we should clear that away. But those are the two biases for gold tomorrow. Now, moving on, we've got to have a look at the Euro USD, right? So let me just grab a swig of my drink. 2 secs. Okay. So let's start on the daily time frame. Let's get some context here. As we already know, I've just alluded to the fact that a bullish NFP tomorrow is going to see the dollar rise to approximately 98.60. So in the Euro USD terms, we would certainly be looking at, I believe, at around 118.20 to even possibly 118.70 by close of play tomorrow. And that is on the basis of a very, very weak number. So we have a miss in the data, 25k jobs added again, unemployment rate rising, 4.4% unemployment. We would probably see that Euro USD trading to around this point of liquidity in here. And that's on the basis that we're trading at 1740 by the end of today. If we're trading higher, then I expect it to move higher tomorrow upon a weak NFP. But looking at where we are at the moment, I would say if we get the bullish or the dovish, more specifically, view on NFP tomorrow, and we see a strong print and unemployment falling, we could see the Euro USD at the very least trading to 116.65 at this ascending level or below. If it's below, then we want to be looking out for our liquidity points in here, probably aiming, I would say, safely for this one in here. And that's going to be there at 116.13. This ascending level actually splits the bearish view directly in half. So you can take trade idea number 1, trade idea number 2, of course, depending on where price is trading at that point in time. However, if the market decides to front run a bit and we see a decline in the asset value in Euro USD before NFP tomorrow, you're still going to be able to have the opportunity to trade from 116.70 down to 116.16. And you're going to be able to pull out a 50 pip trade idea, 45, 50 pip trade idea that way. So definite opportunity there on both sides of the Euro USD from the technical and the fundamental perspectives. If it's a long, of course, we get really bullish data. Like I say, guys, I'm super confident in Euro USD reaching up at around 118.20, so you can take it up to there. Let's have a quick flash at the USD JPY as well. So this is quite a nice range at the moment. Good stability in the asset value. Not really the ideal trades and conditions. Well, I suppose, to be honest with you, I suppose they are a bit, actually. It's not too bad. So we've got ups and downs here. I think from where we are at the moment, of course, strong NFP. It's basic math. Strong NFP. We go back to the range highs. So 148, let's say 148.60, perfect target for a long in the USD yen. Tomorrow, based on, again, we're looking at the sort of, I'd say plus 80k jobs, 4.3% unemployment, 4.2% unemployment would be really good. That would definitely be what we want to see to bolster the long position. And again, we got a rise in jobs growth there as well and wage growth. If the numbers are a miss and it's very weak, I would be expecting the USD yen to possibly come down to around this area in here. Now, the reason I'm not expecting too much of an absolute explosion to the downside on the USD yen is because of a technical factor, and that is the low that we're trading away from. We cannot discount the fact that orders have been building upon this level now from back here in July. And it's not just at the end of July, that was at the 8th of July. So we've spent predominantly July, whole of August, whole of September, and now heading into October inside this range with a lot of capital inflow coming into play inside this range at the moment. So with that in mind, I think, having an economic event like the NFP is definitely going to be the one that could push this through the floor. We just don't know if it's going to be. So if it does push it through the floor, if the numbers are what we want to see for a short, then ultimately I wouldn't be looking to take it anywhere lower than 145.26 upon that. If it's bullish, we're trading from here up to the high. So we've got USD yen, we've got Euro USD, we've got gold. So now I think we're going to skip the energy markets. Don't want to trade them off the back of an NFP event. So then we'll go over to the US indices. So as I said, guys, I really want to be focusing this week on the US 30 Dow and the NAS 100 for you all. I don't want to be including the Standard & Poor's. We want to try and simplify the process. We want to be where the money's moving. The S&P, I find, sometimes can be a little bit stagnate, but you can get very good volume in the Dow and the NAS 100. It's almost a guarantee in NFP days, unless it's, of course, a non-impact event. But as I said, I think these are going to be moving away from each other upon the various data releases that we might see. So if we get a very hawkish NFP tomorrow, I think the US 30 Dow Jones is probably going to have a good time as a result of it. Now, we are, relatively speaking, trading at all-time high territory. We do have, of course, the ATH, which is situated there. And we have our current price, which is 46.425. We go down to the 15-minute time frame. The margin is actually pretty good in this. So what I'd be expecting, so long as price is not trading any higher than, let's say, this area in here, this is your sort of final point in which you can trade. Anywhere below that is, yeah, it's just not really going to be up for grabs. But let's say, for example, we get the strong NFP. Then we'll be looking to take an intraday trade in the US 30 Dow Jones, 46.56, and we'll be looking to target the all-time high at 46.72. If we get a weak number from the NFP, then I would be expecting the US 30 Dow Jones to drop. And what we would do here is we would actually recycle yesterday's trading margins. So we have the highs, the lows. These are yesterday's trading margins. So what I'd be doing is looking to trade down below here. In between this space. Now, of course, we have this afternoon's US Open. And frankly, I don't think we're going to see too much of anything from it. We are the day now before NFP. So I think it's going to be a pretty big non-impact event this afternoon for the US Open. But for the US Open this afternoon, I'd be looking to trade between these margins. Right? So look, they are actually identical. Didn't even have to edit this pathway at all. So this is what I would be expecting to trade between these two. This is for short NFP tomorrow. This is for long NFP tomorrow. And then finally, the NAS 100. Looking at the NAS 100 at the moment, again, we are an absolute powerhouse on this one. Daily time frame. Look at the size of the daily bar that we've got today. Huge daily move. What we have got is a beautiful point of liquidity behind price that we can be utilizing for a short target if the market pumps up. So this is on the basis that we get a poor NFP number. I would be expecting the NAS 100 to still continue rising, more predominantly due to inflationary reasons. So based on poor data, and stay with me because I know it can be a little bit confusing, but if it's a poor NFP, I mean, frankly, guys, look, we're trading at all-time high territory right now. So it's just going to be break, close, retest 1 to 2.1. Okay, there's nothing more I can give you because it is all-time high trading. So we're just simply looking for the last known point of liquidity before the NFP event. So let's imagine the NFP event's coming up in... I don't know, let's imagine the NFP event's coming up in 25 minutes, whatever, right? Half an hour. The last known point of liquidity is going to be this one here. So what I'd be looking for is a break, close, and a retest, which we've already got the break. I'll be looking for a close and a retest of this level, and then looking to trade a 1 to 2.1 out of the top of that. So then I'd be using my stop loss first, put that stop loss wherever I want it, and then I'd be dragging my TP down to meet a 1 to 2.1. And that would be my trade, for example. And also, that is going to be the same thing I give you for this afternoon's US Open as well. So please make please make a note of that. And for the short, well, of course, we have the big point of liquidity down here. We have had a 15-minute retest, but we have had no such thing on the daily time frame. And so what I would anticipate for the daily is for a bullish NFP tomorrow to probably see the NAS 100 take a tank because of the inflationary numbers that would support. If we've got more people in work, we have unemployment being reduced, and we have more people earning money, strong wage growth, average hourly earnings rising. That is all going to be more money flowing throughout the economy, which means inflation is going to get stickier. And so therefore, I would expect the NAS 100 to take a bit of a dip as a result of that one, not be so heavily influenced by employment numbers. Bullish employment numbers, should I say. So you've got this one in here as a potential for a slightly less optimistic target. And you've got the main point down here, 24.82, which is going to be, of course, your major retest point for that daily time frame. Now for this afternoon short, and just to build that in here, the afternoon short, I mean, you can ultimately short below any breaker structure points. So for example, breaker structure is there, and you also have a point at, I mean, you can short below this one as well. So you can take a short below there and then look to target this area down at 24.86. So you can just trade the margins between these zones if you so wish. That's what I'm doing. Okay. So is everybody relatively clear on the plan, and is there any questions? I will of course take images of all of these. I will upload them so that you have access to them. And for those of you who weren't here at the beginning of the session, please make sure you watch the beginning of the session. The first 10 minutes, there's a lot of data that I get into, and it's really quite interesting numbers. So it will give you a good idea and a good consensus as to what we could see tomorrow. Yeah? Awesome. All right, guys. Well, I'm going to wrap things up there then. If you need me, of course, I am here for you. So please reach out. And yeah, have an awesome time tomorrow, guys. I am a little bit sad to ultimately not be there for it. I do like the NFP events, even though I'm a little bit disheartened sometimes. There's a lack of the volatility we get from them in this day and age. But still, they always seem to be a good crack for 45 minutes to an hour. But yeah, have a good time without me. I hope it all runs smoothly. Let me know how you get on. And yeah, have a fantastic weekend. I look forward to catching up with you. The market report will be launched, so I will be doing a market report on Monday. But apart from that, it is an official annual leave day for me. Of course, I'm going to keep up the market report. That's not a problem at all. Get that out to you guys in the AM. But it will be an annual leave day for me. Okay, so I'll catch up with you properly. I'll chit chat on Monday morning whilst I'm doing the report. But properly, I will catch up with you on the Tuesday afternoon, where we dig into our portfolio building session. So have a fantastic rest of the day, guys. Take care of yourselves out there. And I look forward to catching you in the next one. See you then. Bye-bye.